Oh, man, schmerne. Yeah, man. Schmerne, schmerne. Schmerne, schmerne, schmerne. Called that drop on the dollar correct. Too bad it took the markets with it. Good morning, my friend. How you doing? Yeah, I'm doing well. I'm doing well. Actually got some clouds rolling in again today, but that's okay. It's okay. I figured I'd come on live and just kind of hang out for a little bit. Unfortunately, again, a lot of the trades out of the gate didn't really work. But I guess we'll just hang out. Well, silver and gold might see a little bit of a run after 2 o'clock. And I'd also appreciate it if you would trust the process. I make all these calls. Most of the time they work out. Somehow people cherry pick ones that don't. Trust the process. That's it, Jose. It's what I'm talking about, baby. Where my dog's at. It's all about the PPI, the CPI, the ABCs, the UPNs. Like I said, we had the dollar up here, and you could see how it started to break as markets opened. That's why I was like, oh, dollar going down, right? You want index calls, and they started to go up. Right at the open, they started to go up. Gold and silver slowly as well. You can see, look, 9:30, right? A couple of minutes later, I was like, oh, calls on everything. Look, you can see we were moving up, and now we completely flattened out. We were moving in the right direction. Right, we popped up, came up to the moving average, big drop, pop back up here as you see, 67.05, back above moving average. I was like, okay, we're going here at least. And then we just dropped and flattened out. So, unfortunately, it is just one of those days. If you want to scalp some puts and calls, if you want to flip them, it's entirely your own prerogative. I appreciate all the likes. Thank you. Thank you. Thank you. Come again. Yeah, it just, it just bothers me when, again, it's just the way my mind works. There's a way to analyze. I saw what I saw, and I'm getting the opposite result. Shit just bothers me. Shit just bothers me, man. I count, see if I'm rich. Yeah, close. Close. Hydrograph, M-Bot hanging out. Yep. Just hanging out. Yeah, we're just hanging out. I'm freaking still poor over here, Jose. What's going on? Who do I talk to about getting millions of dollars? M-Bot, baby. I'm telling you. Telling you, next stop should be back to 3.5. And you see it time and time again, for the most part, that these stocks, they have these dips and then they storm back. And again, that's why I say, people who were like, oh, what's going on with M-Bot? It's like, you don't want it to explode. You want to be able to keep buying down here at these levels. What about West? Oh, Mr. West. Haven't seen you in a coon's age. Mr. West. Hold on, give me a second. I'm rolling up. Hold on. I appreciate you enjoying my Wild Wild West reference. Mr. West. Deli comes in here, pushes the like button. That's it? That's it? That's all the work you're doing today? That's your part? You did your part? Vin Vizzy, huh? Alright, hold on. One at a time here. Yeah, you've been missing them, alright. You missed a bunch of trades yesterday, but it's okay, because the first thing I was welcomed with today was our buddy Jose letting me know that his SLV calls are down. That's what I need, That's what I need. Oh, good morning, Derek. Hey, good morning. How you doing? Oh, I'm losing money on silver. Thanks for nothing. Oh, all right. Thanks. Thanks, buddy. Appreciate that. Meanwhile, we got the coffee looking good. Again, we had earnings come out. Look at that. Mid-high threes. Stock ran up to almost 5 the other day. And it's because, people like coffee. I don't know. Sometimes it's that simple, Looks like we got a little consolidation taking place. Looking like a little back and to the right. Back and to the right. So again, in my opinion, going back to 5, and this was a SPAC, right? Yeah, this is a SPAC, so that's probably going back to 10, in my opinion. But yeah, I had a couple of people jump in this West, so I'm glad it's working out. I am glad it is working out. Any thoughts on theme stock? I don't know what that is. Yeah, good morning, by the way, Adam. You son of a bitch. People who like decaf, they must be liberals. Yeah, West had good earnings. I'm telling you, we like the coffee, brother. We like the coffee. I like coffee. I don't know about you. I'm drinking it right now. Lacey, good morning. Yes, we love the Fed. Yep. We like the Fed. Yep. Xerox now. You see what I mean? See what I mean? When shit doesn't work out, I get updated. You know what? I'm glad. How about that? I'm glad it's down. They brought in just shy of $2 billion last quarter. The company itself is drastically undervalued technically in the numbers. Again, this was more of a kind of speculative, you know, again, this is like an old school kind of grandfather technology that basically I'm just speculating that, you know, something's going to come out of the pipeline, or they're going to sell off some of the assets or the IP, or someone's going to start using them for something, right? I mean, you know, it seemed far-fetched even for something like BlackBerry, right? But we continue to get good news updates. The new operating system, stock went from 3.5 to over 5. And still, in my eyes, is in play, right? So sometimes it doesn't make sense, you know, sometimes it is, you know, like a shot to nothing, if you will, but more times than not, it does work out. My bad, good morning from Chicago. Oh, man. Chicago. God bless, buddy. God bless. At least you said good morning, though. I appreciate that. I appreciate it. Because I joke around with people because they come in and they're like, oh, what about ABC? And I'm like, look, you don't even say good morning, right? And then they get upset and they leave. So at least Adam stayed. I respect Adam for staying, saying hello. Chicago. Organic coffee from the farm in Nicaragua. Oh, I bet it's top grade, my friend. I bet it is top grade. Yeah, the problem is, though, citizens, we're not allowed to, like, fly anything in like that. You know what I mean? If I worked for, like, the CIA and you were selling, like, cocaine or something, then it'd be allowed. And now, and look, now this person's saying good morning. Look at this. What a bunch of ladies and gentlemen we have in here today. Outstanding. I think this stock is worth a little bit more than 178 million. That's just me, though. That's just me. However, again, I initially knew that they were going to beat the shit out of it. But the problem is, they haven't stopped. How's B&G doing? There's no way that should have went back below that trend line. In my opinion, I'd be a buyer. I'd be a buyer. That's just me. It's just my opinion. Look at DraftKings. Right? See what I mean? See what I mean? They want to bitch to me about silver. Look, who bought DraftKings yesterday, huh? Unbelievable. This is why I say, trust the process. If you ask me what I like, and I say 3 things, and you decide, oh, I'm just going to buy one of them, well, guess what? Now you're taking the bat out of my hand, like I said. It's a numbers game. Now you're taking the bat out of my hand. No, I did not. I don't even know what they're doing. What is it, baseball? Baseball. Yeah, I didn't follow any of that. Yeah. Yeah, I didn't follow. But that's good though. Everybody's playing some baseball. That's good. SFM. I tell you, baby, can't keep a good man down. Hey, nice day today. No, I do like baseball. I used to play. I just, I don't really watch baseball anymore. Yeah, we should have that gap fill. Should get almost back to 100, really, no problem, in my opinion. I still like SFM. You know, we need food. We like food. B&G food, baby! We like the pickles. Yep. We like the pickles. Yeah, this is farmer's market. The business itself was growing really nice. Or nicely, I should say. But again, as you see, look, we got a little gap there, back to the low 90s, another gap there, back to about 98. And again, if we back it up, you can see, I mean, the stock has really been doing very well over the years. It's been stable, had a nice breakout. I still like the company itself. But, yeah, really good recovery, man. Yeah, they beat it up down into the 60s, and now we're back into the 80s, baby. It's all about the food, right? Something like, you know, like a Pepsi or a Kraft Heinz. Again, they're dealing with some issues. Because now, apparently, we're hearing certain things might get banned from the foods, right? Well, I spoke about this like a year and a half ago when people asked about RFK, what the play might be. That's why I kept saying, in my opinion, even though a lot of them are holding up well, I still think, you know, a lot of these processed food stocks, you know, it's probably going to be a rough ride. Even a lot of these pharmaceutical companies as well. I mean, I don't know. I still don't like the pharma stocks. But I don't know, you know, it's like we go down a path, we start making a couple of changes, and then apparently we go to war with somebody. So, you know, if that's going to happen every couple of months, I really don't know how much is going to get done. Now, oil's coming back down. Yeah, you might want to grab puts across the board, in my opinion. SPY, QQQ puts, it looks like. USO puts, it looks like, in my opinion. Put city bitch, put city bitch. Drinking my coffee, smoking my cig, watching Mr. Numbers. Not much. Can't do much else right now, Jose. Sounds like you're set. Sounds like you are set. I wouldn't change a thing right there. Spark 'em if you got 'em. Die-hard Yankee fans. Yeah, I used to watch the Yankees. The Yankees win. Yeah, when I was like a teenager and actually like playing ball myself, I would watch some Yankee games and stuff sometimes. I don't know. Baseball, in my opinion, it was hard to watch. Hard to watch. It's like all I wanted to do was play. I didn't want to watch people play, you know? I don't know. Okay, now as oil's dropping, the market's trying to climb now? What the hell is going on, honestly? We just burning traders? You just gonna sit there and do your taxes? That's what's hot on the street. I'm a doer! Johnny Woo, baby. Well, at least USO puts are making a couple bucks. I remember even like joining the baseball team, and apparently I had like a strong arm at the, I mean, you know, we were only like 10 years old or something like that, which actually is late, right? You talk to a lot of kids, it's like, yeah, I was in T-ball since like 4. I didn't start playing baseball until I was like 10, 11 or something like that, but somehow I had one of the stronger arms on the team. And usually if you're new, you know, they want to throw you in the outfield, which is understandable. So I started in the outfield. And then I quickly realized that, like, there wasn't much action there. So that's when I just decided to make myself a pitcher. Because I was like, you know what, at least, you know, at least I'm always active. You know, I'm always doing something. I didn't even throw that hard either. Which, of course, you don't really find out until you hit the high school level. When they bring in some random Dominican who's throwing like 90 miles an hour. And you're like, all right, I guess I can go to a different position. But yeah, in the moment, I was like, man, it's boring out here in the outfield, man. I gotta go somewhere else. Man, baseball at 4, I'll tell you. People start young, man. People start young. And my father, God bless him, like I said, I was always like some like shy, quiet kid. I just didn't want to do like these unknown activities with these unknown people. And my father, he would always try, man. You know, because obviously he knew what I didn't, right? And he'd always be like, you know, you don't want to play baseball, you know, play football. Oh, there was like a Tiger Schulman's or whatever nearby. And he's like, oh, you know, you want to go take karate class or something? And I just said, nah, nah. Yeah, I was just a weird kid. I did like pitching, though. I did always wish I just had the gift and was able to throw 90 like everybody else. But Doesn't always happen that way. Of course you were. I don't want to hear these fucking stories. I'm over here being negative, and you're reminiscing about the good times. You want to know what the good times were? The good times were when I was in high school, and I would wonder where the hell these frickin' players came from, because I never seen them before. Yet they showed up at tryouts and took everyone else's spot on the team. We all had a feeling something was going on, okay? But we didn't have any proof. Now check this out. Years later, we found out the coach of the varsity baseball team was apparently taking bets from kids in the school on the baseball games. And then apparently, like, I don't know, didn't get his money and, like, showed up to one of the kids' houses at, like, 1 a.m. and his father found out what was going on and, like, called the cops, and then he got arrested, and, you know, he was not a coach at the school anymore. But leads me back to my original point. You know, for all I know, as mediocre as I was, again, I'm not admitting I could have been, you know, some freaking baseball star, but at the same time, I could have, and a lot of other kids, could have had a much better high school baseball team experience if we were not shipping in Dominicans and Puerto Ricans just to win games so that we can make money from the kids betting on the games. Right? Think about that. Think about that. So, that was my high school baseball experience. And I know some people say, well, you know, usually you play in high school, and then, you know, after senior year, if you don't do college, you know, you're kind of done. And I would have been fine with that. But not even like barely making varsity junior year because all these freaking new faces popped up out of freaking left field. Remember, junior year, you're at the school for a couple of years, you know what I'm saying? I mean, you know who's in, who's out of the school. You know who's a player, who's not, you know? Also, what made me laugh was, I remember I was one of the few pitchers who were actually able to have decent ball control when it came to pitching. I mean, you know, again, I didn't throw the hardest, but I was pretty accurate when it came to my location. And again, to their credit, you know, whatever, they brought in whatever, these Dominican kids. And listen, maybe the kid threw 4 or 5 miles an hour faster than me. I don't even think it was, honestly. I think we threw about the same speed, I'm gonna be honest. Maybe he was a little faster. However, he didn't have my movement and he didn't have my accuracy. Okay? That kid made the team. I got cut. Explain. Cannot be explained. Cannot be explained. Dominicans are very good at baseball because instead of using a glove, they're using a tube sock. So, that's how you get really good. I mean, again, you know, I'm not knocking their hustle. I'm not knocking their talent. You know, anyone who is the best of the best should be a professional player in any sport. But we're talking high school level, and you're freaking shipping kids in and giving them, like, scholarships under the table so that you could have a dominant team and freaking place bets. Like, I don't know. Wild, man. Wild. It's a shame, man. It really is. because I enjoyed playing baseball. It's all I wanted to do was, go to high school, play baseball while I was there. And like halfway through, they took it away from me for fucking kids who just came into the school, kids who were fucking recruited. I don't know, it's just wild. They didn't even give out many sports scholarships, too, at that school. Like, a couple of people had them, don't get me wrong. And they were good. They were good. But, yeah, like I said, I don't know. To bring in other random kids so you can undercut your own students? Like, I don't know. It just seemed weird. Yeah, I would like to coach. I should see, honestly. It's actually a nice area up here. And I know that there's like a little league field or something down the road. I should show up in like a month or two or something like that. Talk to one of the coaches or something like that. Like, hey, you need a hand? Practices or whatever. You missed the part about the tube sock. Get your mind out of the gutter, Lacey. Yeah, no, I appreciate that. Appreciate that. Probably would be a good coach. Would be a good. Just like I told you guys with the trading, right? Like, I'm man enough to admit I have terrible trading habits. And that's why I say, like, do what I say, not what I do. You know what I'm saying? Like, I can call out trades and you guys can make money, no problem. But if I trade for myself, I always lose money. So, yeah, I can like teach and explain. I can't do. Put you to help us. Oh yeah, no, for sure. For sure. The architect upstairs already drew it out. Yeah, I wouldn't mind coaching though. I couldn't take bets on my team's game though. I think that's freaking insane. I still can't believe that was actually a true story. That was a true story. And it was from a brand name high school in New York. Freaking crazy. I give him credit though. I mean, he knew what parks to go to, what freaking third world cities to look at. I don't know where he found these kids. Because I'll admit though, our freaking baseball team was nasty. Nasty. Probably legit like a double A team, you know what I mean? And we were like 16. Team was dirty. I also have a small baseball story that no one can take away from me, right? I might be sitting here like a bitch. Oh, you weren't good enough. A Dominican came in and took your spot. Hey, listen, it's fine. It's fine. I'm man enough to admit I was never going to go pro. I was just the average baseball player. I wasn't phenomenal. I know that. However, this is a true story. Freshman year, there was a Hispanic kid. I'm going to say that because I don't remember if he was Puerto Rican. I think he might have been Puerto Rican. But you can look him up. I'll give you his name because he played for the Mets. Okay? It's a true story. Freshman year, he threw, I think it was like 88 or 89. He was clocked at 14. The kid looked 18, by the way, but we'll put that to the side, right? Showed up with his birth certificate, I am 12. But he threw like 90. Freshman year, I got on the A team, and I believe I didn't start, and I was never really put in. All I did was sit on the bench for some reason. But I was put on the A team freshman year. I smacked a single line drive laser right back at the guy's head, right up the middle, got myself on first, stole second, stole third, and then had one of my teammates bring me in home. But at 14, like I said, when the rest of us were throwing, like 70 or something, you got this random 6'4" Dominican throwing 90. They placed him on varsity freshman year. But he threw batting practice at the tryouts, and I smacked a laser up the middle. And the sirens are coming as I reach the conclusion of my anecdote. But yes, I can give you that person's name. The point is, he was that good. He was an ace on the team. He did get drafted by the New York Mets. He did pitch in the MLB. And I, Derek Scarano, smacked one up the middle and got a base hit off of him. True story. I am damn proud of that fact. Yeah, no, the Dominicans, they go hard, man. And like I said, if they really have the skill, let them in the MLB. But to frickin' recruit these kids at, 13, 14, under the table frickin' scholarships, you can't do shit like that, bro. Come on. Yeah, I went to Severian, Lace. They were known for their baseball program. Yeah, it's just a shame. Everything is freaking corrupt and gets fucked with, and went to a Catholic high school and you can't even play baseball. There's some shady shit going on. You know what I'm saying? Think about that, bro. I tell you, this freaking, the whole world is upside down, man. It's wild. I remember they posted those rosters after the tryout. I was like, who the hell are these people? Who the hell are these people? You've been in the school already 3-4 years, you know what I mean? It was an all-boys school at the time. You know almost everybody, even, the guys coming up younger than you. Who's cousin, who's friend, who lives in your area, you've seen them all the time. Right? So we all kind of knew each other. And then after the tryouts, you post the team, and half the roster is unrecognizable. That's why, honestly, I didn't even care, man. I mean, I cared, and of course I wanted to keep playing. And a part of me almost was like, yeah, I could just transfer to, like another one of these Catholic high schools in the league and just play on their team for the last year or two. But it just wasn't worth it. I do wish I threw harder, though. I did always enjoy pitching. Like, I understood the physics of it, the way the ball moves, how the mechanics work. Like, I really, really got into it. And I just really wish I threw, like, a little bit harder so that I could have just kept going. Because I had the movement, I had the accuracy. But you know what they say, Lord giveth, Lord taketh away. We all can't be superstar athletes. What time is it? 12:15. Everything's still down. Looks like they're testing resistance, though, right here. Yeah, close to it. They're going to bring the calls back in play. Gold climbing now. Silver starting to climb now. Oil dropping big. USO puts would have paid off bigly. Yep. You can grab some SPY calls here if you want, in my opinion. Quick little scalp. Could see maybe a 6-7 point climb real quick to this trend line. Look at DraftKings. That's how you know it's a wild day. Strongest name on the list. Fucking animal. Alright, I'm going to stretch my legs. I'll be right back. Okay, back in action. Let's go silver, S&P. Up, look at that. It's up, what, 3 points? I'm a genius. I'm Jennifer. Hey, Jen. What's up, Jen? Happy to have you. Yeah, somebody mentioned you. Welcome. USO puts for the win. For the win. Even a blind squirrel finds a nut, huh? Jen's cool. Alright, alright. You say she's cool. Alright, I guess she's cool. Alright. You're vouching for her? Alright. Alright. Love, 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 love. Thank you, Deli. You're a mensch. I would buy spy calls if I was Jen, in my opinion. She's setting it up. Let me guess, she's on the phone with AT&T also? She still looks good to me. Playing games. They are playing games. And now we're climbing this back up. They're gonna bring this down and pop this up. You might have to hop the fence. You might have to hop the fence. What a joke. Just anything to waste people's time, man. I mentioned SCCO and they freaking drop at 7 points. I ain't afraid of no ghost. I ain't afraid of no ghost. Markets be dropping. Yeah, we got a lot of birds out. I got some Kalshi bets going. Yes, sir. Hold on one second. Hold on. Let me see what we got going here. I mean, it could pause around the 6640s, but I mean, if it continues this step, it's going to 66, in my opinion. Guess you could say you got that gap right there at 6657. Now the dollar's climbing. I see. Yeah, right now they're just playing with it. Right now they're just burning traders. No one knows what side of the fence to be on. No one knows how the market's going to react coming out of, was it 2 o'clock, I'm assuming? And we all know, again, regardless of what something like an oil trend is showing us, we all know that, they can say freaking one thing and then all of a sudden oil could spike or drop big. Actually, looks like an inverse cup and handle right here, in my opinion. Inverse cup and handle is bearish. Loop, handle, break. Yeah, I don't know. I still say USO puts, man. My opinion. Yeah, it looks more like a wedge. There's something strange in the neighborhood. What are you gonna call? Mister. I want the mic to pick up the birds for you guys. Did you hear the birds? Let me check my count. Damn. Damn, homie. In high school, you was the man, homie. Oh, what will Powell say during his conference? You got an hour 13. Pulling all my D-gens out there. An hour 13. See what's going on X. Ah, scared me. I don't. Why is this girl popular? Who is this girl? I mean, you know, with all due respect, they keep putting these girls and shit on stage, and oh, they're the singers and shit. These girls can't sing. These girls can't sing. We know what a woman's voice is supposed to sound like. We've heard Whitney Houston. You know what I mean? Like we know what a set of pipes is. Who are these girls? It's like, oh, you want to like just dress and act like a skank, and we'll just throw on auto tune. It's like, all right, I'll do it. Yeah, give me a couple of mil. What the hell are we doing here? That's what I mean. It used to be about talent, bro. It used to be about talent. That's why you go back, those songs decades ago, they were so classic because those groups, they had the best sounds. That lead singer, the vocals were unmatched. That's why they made it. You know what I'm saying? Unbelievable. This guy's got a couple of tats, all right. I mean, you go back to, you know, like the 60s, the 70s, it's who got a record deal? Like the person in the state that had the best voice, hands down. That's why they got the record deal. It breaks my heart. Hey, yo, Tumbleweed, what's going on? We see you blowing through here. We're throwing cake at the camera. There she is. There she is. Slip and slide. Nice. You got soap on there, though? Soap and water slip and slide drinking? That's hilarious. I really never thought I'd see the day where, like, this whole reaction culture became, like, the norm. What the? No, don't do this. See, I'm claustrophobic, honestly, so I wouldn't even be afraid of the water, but something like that. Oh yeah, snug little fit in through a freaking tunnel in a cave. Like, no way. No way. Look at this. No way. No way. No way. Like I said, I mean, it honestly, if I was feeling really brave, if I was with a couple of decent swimmers, you could see the light at the end of the tunnel. Maybe I'd swim it. I'd be honest. Maybe I'd swim it. Going in there with a vehicle like this, no way. No way. Did he just turn around too? Is that what we just saw? He just had to turn around. Oh, there's my boy right here. Show me Sandflot. Enter the Dragon, still one of the best movies. Wow. That wasn't math, though. That was a post-it. Yeah, those puts worked out for a few minutes. Gotta take out the alpha males. Oh, the sirens are coming as I say it. Oh, shit. Alright. That's all the fun we can have for a day, I guess. If anyone's scalping the spy, I mean, you're having a field day. Sitting here with a nice cup of coffee. Everybody's waiting for 2 o'clock. Look at DraftKings. Yo. Yoo-hoo. See, and what was the first thing Jose said? Oh, my silver calls are down. What about the DraftKings calls, huh? How about that, huh? It's actually setting up to go higher. I don't even know why I alert people in the Discord anymore. I really don't. Hmm. Hmm. You look to move it, move it. You look to move it, move it. Helpful if you're on a call. Oh, okay. Okay. It's all about you, isn't it? The more you know. Bum, 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 bum. No, that was Intel, actually. Speaking of Intel, how they doing? Hey, see what I mean? Actually, it looks like it's wedging, but if the market's going to pop higher, they'll probably keep it going. See, this should technically see a rejection after the premature breakout back into the ascending triangle. The problem is, every day since what, like the end of February, everything changes from day to day, so 1 minute you're up, 1 minute you're down. I mean, maybe we can go from here. Was that whipsaw? 64.43. So, like, maybe we can come in kind of like that. Huh? Like that? Can't see anything. No, we're gonna have to go a smidge higher, smidge higher. It's gonna be like there. Yeah. Yeah, maybe about 66.50. Yeah, 48, 47, like you said before, Killian. Yeah. 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 Well, I'm gonna grab a smoke. I'll be right back. And we're back in action. We're back in action. Hey, listen, buddy, it's changing every minute here. I'm trying, you know? I'm sorry, I can't be perfect. Gap up. Almost looks like it wants to set up a descending triangle, though. I can't lie. Right? I can't lie. But the legend of the rent was way hardcore. What time is it? 1 o'clock? Wow. Might have to prepare an herbal refresh. Yeah, it looks like they're setting it up to bring it lower. That's what it looks like. And if they cut rates, I mean, in theory, we should go higher, but we will probably go lower, which is probably why they're setting it up this way. So if you're in the calls, you know, look for a rebound back up here. Try to get out where you can. And if you want, I mean, you can sit on the sidelines for an hour. Wait for him to start talking. Yeah, well, we had the big pop up here and we were flattening and tightening here at the top. So I assumed we were going to come up here, which is why I said calls. And you can see we came up right to about 66.80 and then we dropped. So they're just bouncing it here in like this 10-12 point area. Uh This is why I just laugh about it though, because like I said, we were here talking economics for how long? They were raising rates over the years. Markets should have dropped, but markets ended up popping and hitting new highs when they shouldn't have. And now every time this guy freaking speaks, no one knows what to do. The market's freaking choppy. They're burning traders. Yeah, it's just stupid. Just a waste of time. That's all it is. It's a waste of time. Unbelievable. Just supposed to sit here and smoke all day? Come on. Trying to be productive here. Yep, there it goes. And the puts. And the puts. It's all about the puts. Hmm. Yep. Check my account here. Boo. Not hardcore. Unless you live hardcore. But the legend of the rent was way hardcore. I'm curious now if they like pop it back up here. Because if this is setting up, technically premature break. Let's see what they want to do here. I still think gold and silver, I mean, yeah, they're still kind of recovering. I think they should be moving more. Darkashane, darling Darkashane, thank you for walks down Lover's Lane. What are you talking? Linda. Telling you, in my opinion, this one's in play, man. That's the OTC market exchange, like the exchange you buy HGraph on. It's the actual exchange, like the CBOE. Have to sneeze. Yeah, SPY still breaking. Yeah, that one got above 3 yesterday, huh? Coffee stock's been doing good. Less than 30 minutes. It's like gold and silver still, yeah, they're slowly inching their way back up. I don't know, man. I have a feeling it's gonna get bad. I don't know why. I hope I'm wrong. Man, I hope I'm wrong. I just got one of those feelings, man. You know, sometimes you get a good feeling. I don't feel so good right now. Spy calls technically in play right here. If they raise rates, I mean, technically we should drop. In theory, we should climb again. But last time they raised rates, we climbed. We were supposed to drop. And what was it? Just like 09, right? 08, 09. I don't know. I just don't trust it, honestly. Eh, spy calls. Couple of bucks. Bang, bang. Bang, bang. You got to flip it every time the S&P. If it moves in the right direction, you jumped in. If it moves 2 points, you might have to lock it in. Because that might be all you're getting. Couple of points here, 2, 3 points there. Okay. The hell? What the hell? Wow. Oh my goodness. There she is. Oh, okay. Are we not allowed to slow down? I tell you, people, the weirdest shit. The weirdest shit is on this platform. Oh, uh, uh, yeah, that's a great idea. There she is. Almost time for what everybody's waiting for. Doop 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 doop. Bop dap dap da 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 da. Scooby doop doop doo 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 doo. Did McDonald's ever come down? Oh. Ba da ba ba ba. People want to cry about SLV calls. They don't want to buy McDonald's puts, though. They're playing games today. See that? See that now? If you're in those calls, you better flip them. Nothing is guaranteed. Because there's some sneaky bastards. Oh, oil! Oh, oil! That's why I say trust the process. Yep. Cool. Oh, who got the cheese? Oh, oh. There you go. Oh, yeah. Oh, very nice. There you go. It's a great idea. They gotta ruin everything. What the hell? Why do I feel like if they both used the shovel, it'd be more than fine? Oh, hell yeah. Oh, for crying out loud. There he is. Mm-hmm. Frog jump. Wow. You may want to grab a trash bag. Okay. Oh my goodness. I'll tell you, man, they can't help themselves. What the hell? There's got to be AI or something. Come on. There you go. You know, sometimes when you clean out the car, you got to grab the jackhammer, you know? Makes me laugh. Calls for the win. Nice. There you go. Saved a life. There you go. Uh-huh. You want to talk about pulling some bullshit? Now we're climbing up and out. At a minute before the conference starts. Man, this is the shadiest shit I've ever seen. Who does this? What market does this? Hey, Slick Rick, how we doing, baby? I mean, again, calls again back to the top of the range. I do think puts though. I really do think puts, in my opinion. But I've seen crazier things. Hey, I got that DraftKings money. It's 2 o'clock. Oh my goodness. Oh my goodness, it's 2 o'clock. And we're climbing. And we're off. It's 2 o'clock. Hurry up. We're pumping. We don't even know what he said yet, but we're pumping. What a crock of shit. Oil sub 95. Like I said, USO puts worked out beautifully. It's a shame nothing else did. And now gold and silver gonna start climbing. Uh-huh. 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 Just like that, we're on the move. I mean, technically that's bearish, which means stocks should climb as the dollar drops, but I've seen crazy as shite. Gotta check my Kalshi, baby. What do you do in a fake market? Well, you put your head between your legs and you kiss your ass goodbye. Let's go. Stocks only go up. Do, 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 bam, 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 bam. Um, Nothing on. I mean, I'm watching Kalshi on the other screen. Nothing has hit yet, so I don't even think this guy started speaking yet. Ah, 2:30. I see. Yeah, it was saying 2 o'clock. So. All right. Still waiting. Let's keep you guys sharp, huh? Stay sharp. Go. I gotta keep you sharp. Let's go. Keep that brain working. Really? Oh, for crying out loud. Yeah, I knew it was blank check, and apparently I kept picking the wrong one, so I just burned through freaking three mistakes. And you could like delay something, you could stretch something out. Yeah. do it. That's how you do it. That's the way you do it. Oh, we're dropping back down. See? That's why I said puts. I said it. Let the record show. I said it. Homeboy didn't even start speaking yet. It doesn't matter. I'm always correct. There you go, Deli. There you go, Deli. That's what I'm talking about. My man. We know what we know. And what I know is I'm just too damn good. Oh yeah, that's a bear hammer. That's a bear hammer. Should be dropping. Put should be in play. Put should be in play here. In my opinion. Scalp City, bitch. Scalp City, bitch. Put City, bitch. Put City, bitch. You gotta go in, and then you gotta go out. Bang, bang. I said I'm the fastest trader in the West. You better be, otherwise you gonna get burned. I said you gonna get burned. DraftKings still green. Doop 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 doop. Doop 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 doop. Ba ba da ba da ba da ba ba ba. We tank everything. It's the final countdown. Diddly dee. Diddly dee dee. Diddly dee. Bada bum bum bada bang. Bada bang bang. Bada bum bum bum. Bada bum bum. Bada bum bada bang. It's all about Mr. Powell. It's amazing how much grease they have to use for this crap, right? Cool. Yep, chemicals are awesome. What the? Cool. Up. What'd I say, Puts? What'd I say? Genius. Genius. No, Power's gonna speak. Unfund. Dooby dooby doo bop ba. Dooby dooby doo bop ba. Yeah, I got it on this other tab. 2:30. Got about 2 minutes to go. Gotta listen in, gotta take those Kalshi bets. Dooba 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 doo 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 doo. Babba dabba dabba da 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 da. Dabba 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 doo doo doo. Oh yeah, I got a bunch, baby. I got a bunch. I bought frickin' recession, stagflation, some yield curve. A bunch. I just bought a bunch. Up, truck backing up. All the way to the bank. Oh yeah, baby. I like it like I like it like that. Oh, thank you, buddy. Thank you. Thank you. It's all degeneracy anyway. $300 price target on Nvidia. Yeah, screw it. Screw it. I mean, they're not big enough, right? Let's keep pumping them up. Maintains buy on Pfizer, eh? Yeah, they like their pharma stocks. Buy on Wells Fargo. I don't know if I'd be buying banks right now. Raises price target, Bristol Myers. I don't know, man. I don't know. Strong by Diamondback Energy? Really? Oh, no way he's speaking, this guy.
And I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months, and inflation remains somewhat elevated. Today, the FOMC decided to leave our policy rate unchanged.
What?
We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals.
Yeah, market's going up maybe. I think
The
calls here
implications of
actually.
developments in the Middle East for the U.S. economy are
Unchanged.
uncertain. We will remain attentive to risks to both sides of our dual mandate. And I'll have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. In our summary of economic projections, the median participant projects that real GDP will rise 2.4% this year and 2.3% next year, somewhat stronger than projected in December. In the labor market, the unemployment rate was 4.4% in February and has changed little since late last summer. Job gains have remained low. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force. due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. In our SEP, the median projection of the unemployment rate is 4.4% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. From last September through December, we lowered our policy rate 0.75 percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should continue to help stabilize the labor market while allowing inflation to resume its downward trend toward 2%. But the implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December. As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or decision. Monetary policy is not on a preset course, and we'll make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Thank you. Colby Smith of the New York Times. There's been some debate about whether the Fed should look through the inflation that will come from higher oil prices stemming from the Middle East conflict. Is that the right approach at this juncture? And to what extent does the fact that inflation has been above target for roughly 5 years now influence the committee's thinking around this?
So, first, let me say we're well aware of the performance of inflation over the last few years and how a series of shocks have interrupted progress that we've made over time. And that happened most recently with tariffs, and
I actually think puts are still in play, in my opinion.
The thing that's really important that we see
I heard
this year
unchanged. I was
is
saying
progress on inflation through a reduction in goods inflation.
Reject here.
The one-time effects on prices of tariffs go through the system, go through the economy. That's the main thing we're looking for going into this exercise. And we need to be seeing that to sort of understand that we actually are making progress, because on net we didn't make progress. And if you look at total core inflation, it's about 3%, and some big chunk of that, between 1/2 and 3/4, is actually tariffs. So we're looking for progress on that. The question of whether we look through the energy inflation doesn't really arise until we have kind of checked that box. It, of course, is kind of standard learning that you look through energy shocks, but that's always been dependent on inflation expectations remaining well anchored. And I think now it's also dependent on what you mentioned, which is that broader context of 5 years now of inflation above target. We have to keep all of those things in mind, and the question of looking through when it does arise will be one to approach not lightly, but in the context that you mentioned.
And just on the SEP, can you help us make sense of why there is still a bias to cut from most officials this year, despite the upward revision to headline and core inflation and the essentially unchanged forecast for growth and unemployment? Just curious, kind of what's the genesis behind the need? What's the need for the cut?
Yeah, so there are 19 people, and so 19 reasons, 19 individual submissions. And if you notice, the median didn't change, but there was actually some movement toward a meaningful amount of movement toward fewer cuts by people. So 4 or 5 people went from 2 to 1, let's say, 2 cuts to 1 cut. And each person has individual, stories behind what they want to do. But essentially, it is that the forecast is that we will be making progress on inflation. Not as much as we had hoped, but some progress on inflation. It should come as we start to see in the middle of the year progress on tariffs. Going through once and then tariff inflation coming down. We should be seeing that. And the rate forecast is conditional on the performance of the economy. So if we don't see that progress, then you won't see the rate cut.
Thank you. Howard Schneider with Reuters. Just to follow up a little bit and to be clear, is the higher inflation penciled in here for 2026 solely the result of the oil shock or something else?
So that's going to be part of it. But, that wouldn't be most of core, right? So the oil shock for sure shows up here. Some of that will be in core as well. But yes, but no, there's also just the feeling that we haven't seen, the progress that we had hoped for on core goods and on tariffs and on the rest of it. So for whatever reason, people did write up their inflation forecast. That will certainly be tied to events in the Middle East and the price of oil, but it's also, I think, a reflection of the slow progress we've seen on tariffs, which we believe we will see. It's just a question of how long it takes for them to get all the way through the economy, and it just takes some time.
Right. And is the lack of change in the SEPs, again, just to explicate this a little bit, more due to the expectation that the oil portion of this will pass through, or more out of concern that there is a potential blow to consumption and growth coming in the form of wealth effects with the stock market down, in the form of gas prices, diverting spending from other parts of the economy?
Puts, baby,
So I didn't get the second part of your question.
The consumer is going to be potentially diverting money to gasoline from other parts of the economy. There could be a growth shock or a redistribution of spending there that can hit consumption, wealth effects as well. I guess I'm wondering, is the rate forecast not changing because you think the oil shock is going to be temporary, or because you want to be sure you're positioned in case growth starts to slow?
So the thing I really want to emphasize is that nobody knows. The economics effect could be bigger, they could be smaller, they could be much smaller or much bigger. We just don't know. So people are writing down something that seems to make sense to them, but have no conviction. To your point, if we have if we have a long period of much higher gas prices, that's going to weigh on consumption. That'll weigh on disposable personal income, and it'll weigh on consumption. But we don't know if that's going to happen. Something quite different than that. We might have much lower than expected pass-through. So people write down, this is one of those SEPs where a number of people mentioned if we were ever going to skip an SEP, this would be a good one, because we just don't know. So I wouldn't say there's a conviction that this is going to go through quickly or not quickly. It's just you got to write something down, and this is something that is that people wrote down. So, we don't debate how long. How do you do that? We wouldn't be able to debate what the length of or size of these effects would be. We just have to kind of make an individual statement. And also, what you've written down before you'll be reluctant to move too far away from that just because you don't know. It's so unclear what the direction from this particular end will be. Meanwhile, the growth has been solid, and inflation, the overshoot is mainly from the goods and tariffs. And, the labor market is, the unemployment rate, of course, is little changed since September. You have a very, very low break-even rate, apparently, for new jobs with little growth in either demand or supply. But the U.S. economy is doing pretty well. It's just we don't know what the effects of this will be, and really no one does.
Steve.
Mr. Chair, in the past, the staff has suggested that higher oil prices, they have a hit to consumption, which Howard was talking about, but that's somewhat offset by increases to domestic production. I wonder if you could talk about that dynamic, especially to the extent that how much U.S. production is happening right now.
So the first thing is there is, the original thinking, the long-standing thinking, put it that way, is that you do look through energy shocks. But as I mentioned, that's conditioned on inflation expectations and that kind of thing. So, sorry, your question was?
What the staff is saying about, and has said in the past.
Yeah.
About
So there'll be an offset.
Offsets, yeah.
So that's true. We have, we're a net exporter of energy, right? So any effects on employment and economic activity and spending would be offset to some extent by the fact that our oil companies will be more profitable and they may even do more drilling. If you ask oil companies about doing more drilling, though, they're going to want to see, a consistent rise in oil prices from where they were before the buildup for the war, and they're going to want to believe that that's going to be persistent for a fairly long time. So they're not sitting there waiting for oil to go over $70 a barrel, and then they're going to start drilling or whatever. They're going to make a reasoned, careful judgment that we're going to have higher oil prices for an extended period, meaningfully higher. So I wouldn't say there's much of that happening. Not much will be happening now, but some of that could happen over time if you see that. But so the net of the oil shock will still be some downward pressure on spending and employment and upward pressure on inflation, of course.
And if I could just follow up on Colby's question, how much do you worry that having looked through tariff inflation and inflation running above target,
Give me 1 minute.
and looking through the oil price shock would undermine the credibility of your commitment to the 2% target?
We have to do our analysis and think these things through carefully, but of course that's on everyone's mind. We're well aware of the history, but you don't want to overreact to that. You want to make the best judgment you can based on the facts. I don't think we're going to let it color our decision making more than is appropriate. It's more the thought that it's been 5 years, and we've actually had we had the tariff shock, we had the pandemic, and now we have an energy shock of some size and duration. We don't know what that's going to be, actually. And it's one of those things where it's a repeated set of things, and you worry that that's the kind of thing that can cause trouble for inflation expectations, and so we worry a lot about that, and we are very strongly committed to doing what it takes to keep inflation expectations anchored at 2%, and I think it's important that we do that. Very important.
Nick.
Nick Timmeros, The Wall Street Journal. Chair Powell, you've described monetary policy as modestly restrictive. If the unemployment rate is roughly stable, inflation moving sideways in the high twos, with an ongoing overshoot in services and non-housing services, not just goods, and the economy doing fairly well, as you just outlined, what gives you confidence that inflation returns to target over the next couple of years?
Okay. So I would say the rate is, you can characterize it as in the high end of neutral, or you can characterize it as perhaps mildly restrictive, even modestly restrictive. No one knows for sure, but it's in that range where it's somewhere around the borderline between restrictive and not. Remember that a big part of the disinflation we're looking for is just the runoff of when tariffs are put into place. Of course, what they do is they raise prices to some extent, to the extent those prices the tariffs are paid by consumers on a one-time basis. And we're waiting for that process. It takes 8, 9, 10, 11 months, a year to go through the system, and we're waiting for the tariffs, which were put in place over the course of the middle part and later last year. We're waiting for that to go through the system, so that goods inflation will return closer to what it's always been. I mean, it used to be for many years it was negative, and then the year before tariffs came in, it was 0, and it's running at like 2% now. So. And so that's kind of goods inflation is running at 2%. So that's not coming from standard Phillips curve restrictive, restrictive policy. It's coming from the runoff of a one-time thing. We also think it's important, though, to keep policy either mildly restrictive or close to that, but not too restrictive because of the weakness in the downside risk in the labor market. We are balancing these two goals in a situation where the risks to the labor market are to the downside, which would call for lower rates, and the risks to inflation are to the upside, which would call for higher rates or not cutting anyway. So we're in a difficult situation, and we feel like that our framework calls on us to balance the risks, and we feel like where we are now is just kind of on that borderline, the higher borderline of restrictive versus not restrictive. And we feel like that's the right place to be.
Can I ask about core non-housing services, though? Because there are some people who think that it hasn't come down very much, if at all, over the past year. If wage growth has come down, if the labor market has loosened, why has non-housing services inflation maybe been slower to follow?
That's a good question. It's frustrating. Non-housing services they basically moved sideways for a year. They're at the same level, and we do expect that they will come down. But it's a bunch of idiosyncratic things. But at the same time, that is one of the things we should be seeing, because to your point, the labor market is clearly not a source of inflationary pressures, and that should really matter for non-housing services, but we're not seeing progress there. So we do, what we expect for next year is what we want to see for this year, rather, is continued progress on housing services, finally seeing that, the goods inflation come back down because the one-time effects of tariffs are through, and then also get some help from non-housing services. That's what we'd like to see. But it's a good question why we didn't see much of that last year.
Edward.
Thanks, Chair Powell. Edward Lawrence with Fox Business. So in December, we saw employment numbers revised down to negative 17,000. January revised down. February posted a loss of 92,000. Is the employment side a far greater risk than the inflation side? Because we are seeing inflation, CPI is close to 2%. PCE has ticked down overall.
It's really, I wouldn't say that. I wouldn't say that that's clear at all, that one is more at risk than the other. So you can point to the unemployment rate being stable, and, in a world where both supply and demand for workers have come down very, very sharply over the course of the past year due to immigration policy largely, a ratio is going to be a better thing to look at than job creation, for example. So, and the ratio is the unemployment rate, and it's been stable since September. So that tells you that. Inflation, you can. We're at 3.0% core. Inflation 2.8% headline. So we've been well above the 2%, that amount, whatever it is, 0.7, 0.8, or a full percentage point above 2% for some time. And that's a concern. We need to get back down to 2%, and we need to keep focused on that, even though we do now face some new inflation from energy. So I'd be hard-pressed to say that one of them is obviously more at risk than the other.
And if I may, what happens if there's no Federal Reserve chairman confirmed on May 15th? Would you stay on?
So if my successor is not confirmed by the end of my term as chair, I would serve as chair pro tem until he is confirmed. That is what the law calls for. That's what we've done on several occasions, including involving me, and it's what we're going to do in this situation. And while I'm at it, on the question whether I will leave while the investigation is ongoing, I have no intention of leaving the board until the investigation is well and truly over, with transparency and finality, And I would refer you to the statement that was in the Fed's brief that you all have seen, and I won't have anything more for you on that. On the question of whether I will then continue to serve as a governor after my term ends and after the investigation is over, I have not made that decision yet, and I will make that decision based on what I think is best for the institution and for the people we serve. Figuring you probably were going to set the dominoes off there, Edward. And I'm not going to have any more to say on those issues, by the way.
Thank you very much. Claire Jones from the Financial Times. People have drawn quite a few historical parallels with the current situation. We've seen oil price shocks in the past. Some people have said the first Gulf War and the Fed's response to that, where there was a focus on the growth risks, is the right parallel. To what extent would you agree with that, and to what extent do you think we're in a different place today? Thank you.
You know, it's really hard to say until we see the situation, the actual situation. In some circumstances, that might be the right case. In fact, for example, if we do see the kinds of disinflationary progress that we expect to see due to tariffs that I mentioned, I think it's hard to say, and it will depend to some extent on the size and duration of the effects we're seeing on prices, and it will depend a lot on what we can see in inflation expectations.
And just one follow-up, if I may, just on the BLS report that was mentioned briefly there. It doesn't seem from the projections or from the comments you've made today about the unemployment rate and focusing on that your view on the labour market story, to a large part being a supply-side story, has changed despite the quite negative number in February. Would that be the right take, and was there anyone else in the room who thought differently, and that the February jobs report was cause for concern?
So I think you have to take the two together. You know, in a way, the January report was a positive surprise, and the February report was a negative surprise. If you put them together, you get something in the middle, and I think you have to really, as you do, I'm sure, realize there was a strike and there was weather, and that's about 80,000 of the negative effect total on the February report. Notwithstanding that, so what do you see if you take a step back overall? There are a number of indicators that suggest a degree of stability, but the thing that I think a good number of people on the committee are concerned about is just the very, very low level of job creation. If you adjust what has been the trend job creation over the past, let's say, 6 months, if you adjust that for what we think, our staff thinks, is the overstatement due to overcounting, effectively there's zero net job creation in the private sector. But actually that looks like that's about what the economy needs in terms of dealing with very, very low, non-existent really, growth in the labor force, which of course we've never had in our history. So you've got a sort of a zero employment growth equilibrium. Now that's balance, okay, but you know, I would say it does have a feel of downside risk, and it's not kind of a really comfortable balance. So you know, we look at that, we see it, we get it, and I mean everybody understands the arithmetic, and that's you can say the break even is zero, but nonetheless it's something we're watching carefully, and you know, are concerned about. But ultimately, though, you can argue that it's a consequence of deliberate policy, which is really the changes to immigration. That's the biggest factor there, and but nonetheless something we watch carefully.
Andrew.
Thanks, Chair Powell. The economy's experienced a series of supply shocks in the last few years, COVID, tariffs, 2 oil price shocks. Do you think that is bad luck, or has something changed in the world that makes supply shocks more common, and does the central bank need to start taking account of the risk of supply shocks as a more common problem?
You know, we did go through a long period where the shocks were all demand shocks, and you know, so we've had a lot of practice thinking about supply shocks in the last 4 or 5 years for sure. And it's just a very different thing, and a much more difficult thing, because it does immediately raise the question of tension between the two parts of our mandate. But you know, has the world changed? I mean, COVID is a one-time thing, right? This energy supply shock is a one-time thing. It's not because of some broad tendency or anything, I don't think. And you know, the oil shock with Ukraine was also a consequence of military action. So I don't know that the world has changed in a way that there'll be more supply shocks, but there's people have written that paper and that speech a number of times. A number of people have tried to make the case that that is the case, and in fact, we have seen more supply shocks in the last 5 years than we've seen in many years before that. It's a fact.
Okay. You said last year that the Fed was reviewing its communication strategies, including the SEP, as part of its framework review. Whatever happened to that? And I have like 5 follow-ups to that, but I guess, what would you change about Fed communications if you had the time? Thanks.
What happened about that was not much, and I'll tell you why. So, we looked carefully at many aspects of the SEP and of our communications, and there weren't any ideas that had very broad support on the committee. And you don't want to make a change to your communications unless you have the committee behind that. So we didn't really make any changes on that. I had hoped that they had some things that I wanted to do, but they didn't attract broad support, and we'd already made all the changes we made to the framework. That was a critical thing. So we didn't. And, I wish we had been able to do some things, but we didn't. So maybe the next chair will take a look. I'm sure he will.
Michael McKee from Bloomberg Television and Radio. The minutes show in January some members of the committee wanted to include a two-sided guidance on policy. Was that discussed today? And given the rise in the inflation expectations, how much support for a two-sided policy warning would there be?
So it did come up today. The policy that the possibility, rather, that our next move might be an increase did come up at the meeting, as it did at the last meeting. The vast majority of participants don't see that as their base case, and of course we don't take things off the table. But you correctly characterized, what was in the minutes that several participants indicated, and something very much like that conversation did happen. What was your second question, though?
I was just one question there, but follow-up would be, there are a lot of goods besides oil that are trapped in the Strait right now, and a lot of supply chains getting snarled. How much concern do you have about whether, if this becomes an inflation problem beyond just oil, whether there's anything you can do about it or would do about it, given the efficacies of monetary policy?
You can worry about other commodities. You can worry about all of the ways that oil-related commodities go into manufacturing and that kind of thing. The truth is, it's completely out of our hands, and we just, like everybody else, we have to just wait and see what happens, and it'll come down to how long the current situation lasts, and then what are the effects on prices, and then how do consumers react and that kind of thing. Really, I wouldn't speculate in any way, and there's really not a lot we can do other than kind of watch and see.
Maria Luisa.
Afternoon, Chair Powell. Maria Luisa Capurro with Bloomberg News. I wanted to ask you, you've said longer-term measures of inflation expectations reflect confidence that the Fed will get back to its 2% goal, but there are some colleagues of yours who have pointed to higher dispersion in household service, in business service as well. So, and that they take as a signal that inflation expectations may be less sticky than in the past. I'm wondering if there was a discussion around that at this meeting across the committee, and what were the views of what is the state of inflation expectations and the risks from higher oil and gas prices.
So at this meeting, a number of people mentioned and staff briefed on short-term expectations having moved up quite a lot for reasons we understand well. But long-term expectations, you can always find one that's troubling or some aspect of one that's troubling, but ultimately, right through this whole period, the overwhelming majority of the things we look to, including markets, including surveys of the public and also of forecasters, they've all been pretty solid on longer-term inflation expectations being right where they need to be, consistent with 2%. So that continues to be the case. We didn't have a lot of conversation about that. I think everyone does agree that we'll be watching those extremely carefully as we see the effects of the price increases come through from the conflict.
And still on how the discussion went across the committee, before coming to this meeting, there were some members who were discussing the risks of a slowdown in growth and at a time of where inflation remains high. It really doesn't seem that most members are penciling in a slowdown in growth.
No.
But has there been any discussion of the risks of stagflation at this point?
So people actually wrote up their growth forecast by a tenth, and I think that's probably to do with just growing confidence in productivity. But sorry, and your second question was just
If there have been any discussions about the risk of stagflation scenario.
Yeah, so as I mentioned, there's tension between the two goals, right? The upward risk for inflation and downward risk for employment. So, and that puts us in a different situation. You know, when we use the term stagflation, I always have to point out that was a 1970s term at a time when unemployment was in double figures and inflation was really high and the misery index was super high. Add them together, you get the misery index. And that's not the case right now. We actually have unemployment really close to longer run normal, and we have inflation that's 1 percentage point above that. So calling that stagflation, it's not. I would reserve the term stagflation for a much more serious set of circumstances. That is not the situation we're in. What we have is some tension between the goals, and we're trying to manage our way through it. It's a very difficult situation, but it's nothing like what they faced in the 1970s, and I reserve stagflation for that, the word for that period. Maybe that's just me.
Elizabeth.
Thanks so much. Elizabeth Schulze with ABC News. President Trump says that oil prices and overall inflation will go down very rapidly as soon as the war ends. Do you agree with that?
I don't have a forecast on that.
Back in action.
When we're thinking about the impact on American
It's going
households, as you know, they've been
Up,
facing
went
these
down,
higher
then we
prices
went
for
up. All
years.
right.
They've seen an almost $1 increase in gas. How worried are you about households, especially lower income families, being able to afford those price hikes? And should people be bracing for higher costs, including for food now?
We don't know how big these effects are going to be, and I don't want to characterize them in any way. Of course, people are already seeing gas prices. Gas prices are up almost $1 a gallon. We hope that isn't for a long period of time. And of course, people will feel that, but I don't want to speculate about what that might mean because, honestly, that would sound like I have some idea of what's actually going to happen, and I don't think anybody really does. We're going to see how this works out, and I just would leave it at that.
Victoria.
Hi, Victoria Guido with Politico. I just wanted to ask, for purposes of the next meeting, how the Middle East war develops between now and then, how are you thinking about what might guide action at your next meeting? I mean, if we have oil prices, above $100 a barrel the entire time until the next meeting, is that going to change your wait and see stance? Like, what would lead you all to move, or are you on hold pretty indefinitely?
We'll have to wait and see. I mean, we always say we're going to learn more by the next meeting, and usually we do, but in this case, we're going to learn a lot because we're going to learn 6 weeks to the day till the next meeting, and we're going to see whether what happens is it's going to be very important for the way the economy looks and the way the outlook evolves with what happens in the Middle East. That's going to be a big factor, and we'll know that then. I don't know how it's going to affect our thinking. I really don't. And we did talk about alternative scenarios a little bit, but it's just I wouldn't bring that in here. It's very uncertain, and I just want to remember that we don't know, and we shouldn't assume it's going to be one thing or another. We're going to see.
So is it a matter of you don't know how the situation itself is going to evolve, or even if things remain as they are, the economy could still remain relatively durable in face of them?
Yeah, that's true too. No, I mean, the U.S. economy has just, made it's been strong through a whole bunch of challenges. I mean, if you go back to 2023 when we raised rates a lot in 22 and 23, and close to 100% of economists called for a recession, which didn't happen. In fact, 2023 was a really strong year. So the U.S. economy has really been just doing pretty well through a lot of significant challenges over the past few years. It's been amazing to see. And I don't know what's going to happen in the next intermeeting cycle, and I don't know what's going to happen in the Middle East. I wouldn't want to speculate.
Hi, Chair Powell. Thanks for taking our questions. What makes you so certain that tariff-related price increases will be a one-time effect? I don't think we've seen you since the Supreme Court tariff decision, and it's pretty clear that none of us know what the extent of the tariff shock will be as the administration moves to replace some of the tariffs that were overturned. So I suppose I'm curious, what would make you question this certainty that tariffs are going to be a one-time price effect?
Well, I would not at all use the word certain about my views on that. I'm not certain. I'm uncertain. But just if you think about what it is, it's a one-time increase in the price of a good, right? And what inflation is ongoing increases in prices this year, next year, the year after. That's what inflation is. It's not a one-time price increase. There's a very, very big difference. The public doesn't really focus on that, but that's the difference. And tariffs should be in theory, unless they cause people to start expecting still more tariffs the next year and still more tariffs the next year, they should be a classic one-time thing. People say the same thing traditionally about an energy price spike, because traditionally prices go up and they come back down. And by the time monetary policy would react, it would be over. So I don't have tons of confidence on that. I think the theory is probably right, but as usual, the time it takes to get all the way through the economy is just very uncertain. And we found that coming out of COVID, that the inflation did go away, and largely for the reasons we thought it would, but it took 2 years longer than we thought. So I think we have to be humble about knowing how long it will take for tariffs to go all the way through the economy. And so what we've been doing, as our staff's been doing, it's very interesting. They started off with just an estimate because there wasn't a real history, and then they've built, based on the history that they're seeing of tariffs coming through into prices, they can now have an arc. And for all the tariffs, they can say, well, so we have, I think, a slightly more confidence that we will see tariff inflation coming down, not prices, but you won't see further increases.
Again, huh?
And we should start seeing that more and more in the middle parts of the year. We do expect that. Now, you're also right, though, that the level of tariffs came down fairly meaningfully in the wake of the court decision. But the administration said they're going to get that rate right back up to where it was. So, and we assume that they'll do that over time. So that's how we think about it.
Thank you.
Chris Rugaber.
Hi, thank you. Chris Rugaber at Associated Press. You talked about the shortcomings of the SCP in this environment. I wanted to ask about, or throw in an additional thing, which is the fact that it's happening before transition. Is there still some value, perhaps, in the public knowing what other Fed officials are thinking, the ones who will stay on for the rest of the year and beyond? And does that even handicap your successor in any way? Well, just in terms of having a whole committee expressing its views, is that something that locks them in for the rest of the year?
No. We never. The SEP is never. People are more than happy to change their SEP dots. They're no way bound by them. It's your opinion at a moment in time, which can change based on events. Sometimes very quickly. So it never locks people in. People are more than happy to be proven wrong in either direction. And so I just think we do it. And, I mentioned this was a time when it's very hard to do it. During the pandemic, we actually took one meeting off, I think. But we don't like to do that just because it's hard to do. We should just keep doing it. But I just would say for this one, though, I think it's even more than usual good to take the forecast with a grain of salt, because subject to just very high levels of uncertainty.
Brian.
Hi, Chair Powell. Brian Chung with NBC News. So you mentioned at the beginning of this conversation that you're well aware of the history of inflation running above target. It seems like that might be what's underpinning the affordability problem that we're hearing a lot about on Main Street. Are there any signs to you that that's impacting the psychology of the consumer, especially given that they're a big driver of overall economic activity?
I'm not sure what that's all about, but I'll tell you what I think and what we see in surveys, and that is, there were big price increases all around the world, by the way. Everywhere in countries like the United States had basically the same kind of thing. It was a global inflation coming out of the pandemic, and everywhere people are feeling like real wages have been going up in the United States now for
620
3
Canadian
years,
on
roughly.
hydrograph.
But people are not feeling good about it yet, and it will take some years of positive real earning gains for people to feel good again, we think. But you're right. But when you talk to people, they do feel squeezed, and there are areas where prices are still going up, like insurance. Various different kinds of insurance are getting more and more expensive, and that's just catching up really from inflationary pressures that take a while to get to into the price. So we take it very seriously. We don't dismiss it at all. It's a very real thing from the standpoint of what people are experiencing, and what it does for us is makes us even more committed, if that's possible, to getting inflation back to 2% on a sustained basis.
How does the Fed's independence play into the ability to address affordability?
Well, independence is what allows us to do our jobs, and stable prices is half of our mandate. It's one of our two mandates, maximum employment being the other. I mean, look at every advanced economy that looks anything like the United States, anywhere in the world, in a market economy, in a democracy, and you'll see, pretty much central bank independence that looks a lot like, in some cases,
Any
stronger
earnings
than what
today
we
you guys
have,
are looking
but
at?
It's critical that we have that so that we can do the things when we need to do them to preserve price stability. And it's an accepted standard practice, and I think has a lot of support, certainly in Congress, which is where our oversight is in Congress. And you see that among Democrats and Republicans in the House and the Senate.
Hi, Chair Powell. Richard Escobedo at CBS News. Thanks for doing this. Two
Thanks for
questions.
doing this.
One,
It's his
how
job.
high would oil prices and broader inflation have to go, and for how long for the committee to consider hiking rates? And then secondly, diesel prices are rising faster than gas prices. How concerned are you that the increase in diesel might drive up food and goods prices and lead to broader inflation?
Yeah, I'm not going to give you an example or specific answer on the first question. We're prepared to do what needs to be done, but I wouldn't want to hypothesize about what that might be. In terms of diesel prices. So your question there is, are we concerned about it? I mean,
how concerned, and whether or not it will drive up, the cost of food and other goods that really rely on it to
So I
move
think
across the country.
it's a more general concern than that. It's diesel prices because that's transportation of food and things like that. There are just lots of ways that oil and derivatives of oil get into the production and transportation of many, many things. So, and those, there are big effects in headline inflation, but things like that leak into core as well. And the effects may not be as big, but they're quite real and they're material. So we are aware of that and we're watching it, but we're right at the beginning of this, and we don't know how big we just don't know how big this will be and how long it lasts. It may or may not be something that really makes a big imprint on the U.S. economy. We're just going to have to wait and see.
Thank you.
Baba, okay. All right. Yeah, we'll look.
Thanks very much. Just to sort of stare into the future for a little bit, I was looking at the longer run bits of the SEP. I noticed that the growth estimate had been revised up a good chunk from 1.8 to 2, and the kind of long-term Fed funds rate as well. It'd be great just to hear, is that AI productivity or what's going on there exactly?
Yeah, I think it's just productivity. We actually started seeing meaningfully higher productivity some years ago, 4 years ago, 5 years ago, and that's not because of generative AI. We won't know for years what it's really due to, but it could be due to the kind of things that people did during the pandemic to economize and and somehow become more productive because there was an incredible labor shortage. But I think economic forecasters are very skeptical of periods of high productivity because they're so rare and they're often revised away. And for many of us, I never thought I'd see this many years of really high productivity, and by the way, expect it to continue. And we haven't really started to see the effects of generative AI, and that should certainly contribute to that. So it's quite unusual, and it's this is the higher productivity is the thing that allows incomes to rise over time. And so it's a great thing. Was that your question?
Yeah, no, I was just curious what lay behind that. And just briefly on that as well to finish up, you hear the argument a lot, this is a sort of disinflationary story, and if you believe that productivity thing, that should also weigh down inflation over time, maybe then kind of pull down where rates end up. Do you kind of agree with that line of thinking, or do you think that's not how you should think about where the rates
I think you have to be cautious about that, in particular if you're talking about AI, about generative AI. So remember, in the short term, what's happening is we're building data centers everywhere, and that's actually putting pressure on all kinds of goods and services that go into building these things. So that's actually probably pushing inflation up at the margin. In addition, it probably raises the neutral rate. So in the near term, you're not looking at something that would immediately call for lower rates or that would be lowering inflation. Over time, though, sure, it can be if it's expanding potential output, which is what higher productivity does, then it actually can be. But I think it's an empirical question because it's really is the demand growing faster or slower than the supply side. And I think we just don't know that answer ex ante going in. We'll just have to wait and see. Thank you very much.
Boo! You suck. Markets be slipping, yields are up. No, wait, not Disney. Holy shit. Hmm. And then we had a jump up this week, huh? Hey, what's up, brother? How you doing? I think MU puts, honestly. I mean, I know the demand is there, and they have a very good chance of actually hitting that mark and reporting some crazy wild shit. But, I mean, you could make the argument that it's all already factored into the price of the stock, so I would swim against the stream. I would go MU puts. Baba. Up. We got numbers already? Uh, yeah, I mean, technically this one's still kind of in play. Arcat. Five below. Whoa, that's a big jump. Actually, I think puts on 5 also. Art flow. Whoops. Nice. 11% going into earnings. Is it showing us numbers? One looks good to me. HDN calls, my opinion. Lunar. God, I remember that one. Holy shit. Luna. What we doing here? 50-60, 50 City Million. 3.7 billion. Yeah, I'm gonna say puts on that too. Luna. Canadian Soul. That's a channel. I think you want this one either. Arco. How they been doing? Oh, where'd we get up to? Got up to 9, got back above that 870 mark, huh? Not too shabby, huh? Not too shabby. Let's go from here, though. What is this? 654, 654. Yeah, we'll do one of those. There you go. Nice Q3. Looking for 128. That seems like a little bit of a jump, but I'd give him the benefit of the doubt. Good old Arco. Restaurants. I'd say Movado Signet Jeweler calls, actually, in my opinion. Yeah, I guess that's it. If you were to play one, uh, uh, Yeah, I mean, maybe Movado. Check numbers real quick. Instincts told me calls, though, in my opinion. Yeah. Yeah, I'd have to go with calls on this one. Let's check the jewelers. Ah, interesting. They're taking a hit. Yeah, I like both of those. I kind of like both of those. We got $1 billion debt. I like Signet and Movado. I mean, again, it's hard to call. I mean, ACN should pop up. They beat the crap out of it, RCAT, again, I mean, I don't know what they're going to say, but it looks like it's setting up to pop. Arco should go higher as well. MU's kind of swimming against the stream. And like something like Lunar Puts, in my opinion, should be like a layup. But that's what I mean. Shit like that's out of my control. So, I don't know. But Movado and Signet look pretty decent, I can't lie. Look at the S&P. I mean, index puts for the win or index puts for the win? I mean, let's get some dubs in the chat here. Are you kidding me? Freaking knew they were going to destroy this.
That was easy.
I mean, we had that line right there. It was right around 66.50 and change. Freaking just broke 25 points below that. Yep. That's why, again, we were trying to scalp in here and play the tight range, but I freaking knew. I knew they were setting up that descending triangle, man. And they gave you that bump right at 2 p.m., right? When they acted like that was the time, and then 2:30, and then boom, we start to break. Glorious. DraftKings still green. When in doubt, buy DraftKings. Oil on its way back to 98 a barrel. It was good while it lasted. It was coming back down to reality. They like to mess with the oil though. They love it. Gold and silver now back down 3-4% respectively. Yeah, I mean, we could see, again, low 6600s. I don't know, though. We got less than 15 minutes to go. I don't know if they'll really continue to beat the crap out, even though Dow right now is down almost 800 points. NASDAQ's approaching a 350-point day drop. S&P and NASDAQ down 1 1/3%. Dow down 1.7% right now. SCCO dropping hard, of course, with gold and silver. You son of a bitch. Anything to burn traders, man. Anything to burn traders. Because I can only imagine the money flowing into metals. Right? They can spike this dollar all they want. But I can only imagine the money flowing into metals. And of course, in the short term, I'm kind of dragging ass. In the long term, though, once again, almost perfectly working out as expected. Son of a bitch. Ah, you son of a bitch. MU puts, maybe 2 more. I'm telling you, in my opinion, I like Movado, I like Signet. Again, I don't know what the options look like, but something like ACN looked like it was ready to pop. Arco, again, is, McDonald's in the Caribbean. I mean, that's a decent bet. In general, I think the stock is undervalued. Yeah, that other one, what was it? Heart Life or whatever? That one looked a little overvalued. Lunar is overvalued, in my opinion. Yeah, Arcat looks like they want to pop it in the technicals. But again, I don't know. I mean, again, technically it's overvalued on paper, but it's one of the cheaper ones. It could be setting up for a pop in the technicals. Movado does sound like the play. It does look pretty freaking good. I can't lie. I really can't lie. And if you look at, I believe both Movado and Signet, I think we could double check, but I'm pretty sure the float, the shares continue to slightly drop. The fundamentals are strong. Right? Because remember, too, I mean, though technically on paper, in theory, those should have been the companies that have been getting some decent business over the last couple of quarters, right? Because everything went frickin' ballistic and haywire. Movado option chain garbage? Yeah, wait till tomorrow. Wait till tomorrow. Throw me some prices here. Throw me some prices. What are they? They got monthlies? Got some 25s. I'm gonna get me some 25s. And you're the reason why. Hey, listen, shares are looking good right now, in my opinion. Looks undervalued. Getting a nice little dividend right there, huh? Huh? Nice little dividend right there. Zero volume completely. Wow. Damn. That's a shame, man. That's a shame. Are they cheap asks though? Let me see. Let me see. What do we got? 10 minutes. Oh shit. Hurry up. Hurry up. Quickly, quickly. Yeah, SIG's a little more popular. Wow, 2 volume on the 25s tomorrow, eh? And how about if you go out to April? Uh-huh. Yeah. Yep. Like I said, again, it's very light volume on something like Movado, but technically if you can grab like those April monthly 25s, I mean, again, the 25's expiring Friday. Could pay off. You know, it's your call. I mean, right now, yeah, there's no volume and it's, 0 by 60 or whatever it's showing me, but I mean, you might be able to put in like 15, 20 and get filled. Who knows? That's what I mean. I used to do wild shit like that. And then when it would pop, everyone would look for the volume over the next day or two. And the volume itself would actually help make my market for me. And then I would, flip for whatever, 500%, 1,000%. It's a risk, though, like anything else. Gotta risk it to get the biscuit. It's all about the biscuits. Oh wait, I didn't tweet. Oh man. No one's gonna believe me, man. Yeah, I'm gonna take Baba out. I don't know what's going on with Baba. It was showing me numbers. Actually, I'll put it back in. Just in case. Stock sucks anyway. Like my own post. Fridays I got filled to 21. Yeah, see what I tell you? That's what I mean. Something like that, right? You go bottom half of the mid, right? You go bottom half of the mid. That's why even those other ones like out till April, 50 by 80, right? Last trade 65. Like you might be able to put in even like 55 or 60 and get filled. But yeah, I used to do shit like that. I would look for like big spreads like that, like 10 by 40, company reporting earnings, and I'd put in like 15, 18, 20, and I'd get filled down there. And then if it happened to be correct, like I said, all of a sudden it would grab the trader's attention, it would get volume the next day or two, and then before you know it, the things are worth 100 and change each, and you got filled at 18 before there was really a market for it. So again, of course, risky as we know, because if they miss, it's going to drop, it's not going to matter. But you understand my point. Yeah, put in the last fill, beautiful. Beautiful. That's how you do it, baby. MU, Sig, Movado. Let's go, baby. Let's go. And let's check the times. MU is right at the close. And Movado and Signet are before 7 a.m. tomorrow. Like I said, if you want, you could consider RCAT. Take a look at ACN option chains. I mean, you could try to buy like 10, 15% out of the money for mad cheap, because they've been beaten up. I like ARCO calls as well, honestly. I like ARCO as well. The other ones, anything can happen, like a Lunar, the Canadian Solar, I mean, also could be a toss-up. And Darden, again, like, I don't really go out much. So Darden, I mean, to me it seems like puts, but I don't know. I feel like everyone's struggling out there. So I feel like, going out to eat and shit, I feel like that's all down. Sometimes, your gut feeling is the right one. But yeah, a lot of those are tomorrow morning. Today, after the close, we have MU, RCAT 5. And that heart flow. Everything else is tomorrow morning. Arco got filled. Let's go. Enemy spotted. Oh no, wait. All right, I'm gonna stretch my legs and we'll come back for earnings. Be right back. Okay. MU down. Ah. Yeah, everything's great. Yeah, I know. Yeah. Yeah. Everything's great. Oh no. No. $150 new stores. Damn. Wait, what are they looking for? 17? 173. Ah. Well, that didn't work. Well, revenue up 40%. Strong outlook. Yeah, but I gotta pull up the freaking report. 49 mil. Yeah. Not bad for this hot flow. Could be a buy in the future, but a little overvalued right now, in my opinion. That one's down about 2.5% right now. Keyboard right on time. This is what? In the morning? Tomorrow? About our cat. Big momentum. Of course. Of course. Can't read about that yet. Look at oil, bro. They like to play games. Yeah, I don't know. MU might come back down. Five still up 3%. Hmm. Hmm. I don't know. I mean, honestly, it might stay up. Even it might barely stay down, this one. And the market cap right now is about 2 billion. I'm telling you, a lot of people might be buying that one right now. Yep, can't read it yet. Yep. Yep, yep, yep. Look at that oil, bro. Damn. Damn. Yep, looks like we're on the up and up. What's this right here? What is this? Right there. Right there. About 108. She's off. She's off. Right there is what? Yeah, like 99 and a third, kinda. If it doesn't stop there, it's going straight up. Look at this now. Silver down 5% now. Hopefully it stops at that line. Not cool. Well. Let's get one more after hours check. Telling you, I think they're going to bring MU down, but Who knows? 5 now up 5%. Uh, you son of a bitch. Oh, the keyboard again. Look at that oil. Yep. To the moon, Alice. To the moon. All right. Well, I'll try to jump on early and we could double check those earnings tomorrow morning. I'm not going to be here at 7, but I'll try to get on early. But appreciate everyone's time. Appreciate your support. Was a rough day today. Hope everyone's doing all right. Everybody have a good evening. Sleep well. And I will see you tomorrow. Okay, bye.